Hello friends, very good evening. Thanks organizers for giving me an opportunity to present on our recent topic, that is Budget 2025 Direct Tax Proposals. Friends, what is the objective of budget when budget has already came in July 2024? But since this is a Modi 3.0 full budget, so there were so many priorities, economic priorities are there, and the budget is very simple as well as very not much lengthy budget. The economic priorities for this budget is the fiscal stability, the tax reforms they have to bring in so that the middle class levels get good benefits out of the budget. The budget has focus on the investment growth. They have allowed 100% FDIs in insurance sector. It has grown from 74% to 100%. They have like the main focus is consumption. They have that more benefits are given to people and the consumption will take place. Business expansion is also another benefit. Ease of doing business is the other benefit which the budget has been pronounced. Now, what are the highlights of the budget? The budget has said that we will trust you first and we will scrutinize you later. Nirmala Sitharamanji's views is that we will trust all the assessees, we will trust all the persons who are filing their return of income. Second thing is decriminalization of the provisions. This is a very important aspect which they have taken place. That is, they don't want to penalize people, they don't want to prosecute people. Therefore, they have given some remedies to those who have deducted TDS and deposited it at within the quarter. So decriminalization of provisions has been done. Already lakhs of cases are pending before the court. I think there are around crores of cases. So why there is a need of litigation? They want to reduce the litigation and want that people should freely trade in India, because we are competing with Dubai. Dubai has very reduced level of taxes, and if we will compare it in India, other people will come to India if we will give them tax benefits. Now the present government has brought in very like good benefits for middle class. 12 lakhs limit, let's see the 12 lakhs limit, is it very easy or we have to go into depth of the income tax provisions. Next thing is, today the income tax bill has to be presented, the new income tax bill. Friends, why they have mentioned income tax bill? Why it was not only the tax bill? Because they do not want to include inherent tax. Inherent taxes are being levied in different countries. India is also wanting to levy inherent taxes. So therefore, they have given the word income tax bill, and it would be half book of income tax. Like Nirmala Sitharamanji said that the book of income tax would be half. We will have a separate book for provisos, separate book for circulars, notification. Let's see whether it would really be half. Then friends, I would like to focus more on AIS reporting. This is annual information system reporting, which we all are seeing that before filing income tax return, we check that whether annual information system data is being matched with the income tax return which we are filing. Government is getting data from banks, government is getting data from many other associations. Like if you have sold the property, government is getting the data. If you have given gift to somebody, government is getting the data. If you have traded in cryptocurrency, government is getting the data. So cryptos are also being included as a digital currency, and as a rupee, cryptos are also been taken care by the budget. We will see the provision what cryptocurrency has taken place. New tax rate. Now friends, whether new tax rate, that is the exemption of up to 12 lakhs, there would be nil tax. First point is, it is applicable only in the case of new regime. There is no concept of old regime. Concept of old regime would be there since till 31st March 2025. After that, there would be no concept of old regime. It is applicable only for individual assessee. The 12 lakh benefit is available only for individual, but the slab which has been given, that is up to 4 lakh nil, 4 to 8 lakhs 5%. The slab is applicable on individual HUF, AOP, BOI and artificial juridical person. But the rebate would be applicable and given only to individual assessee having the income up to 12 lakh rupees. Now if the income exceeds 12 lakh rupees, then what will happen? Then if suppose the income is 12 lakh 10,000, then the higher the 10,000 rupees or the taxation whichever is lower would be paid. So in that case assessee have to pay only 10,000 rupees, so he is eligible for maximum marginal rate MMR benefit. Now this 12 lakh limit, if the assessee is earning short term capital gain or long term capital gain or having any other income, then this benefit is not available in that case. That is, assessee have to pay tax on short term capital gain, long term capital gain. Now there is no change in surcharge rates, there is no change in education cess rate, there is no changes in corporate tax rate or partnership tax rate or LLP tax rate or cooperative society tax rate. Now friends, whether old regime is still beneficial? Yes, it will be beneficial when if an assessee is having any income only from capital gains or his income is less than 5 lakh rupees. Suppose you have an assessee who does not earn any other income. He has 4 lakh rupees long term capital gain. His income is taxable. He can take old regime benefit in this case. Hope I am audible, Durga? Yes. Okay. Then next, tax rates for individual HUF, AOP, BOI and artificial juridical person. Friends, this is in new regime. New regime tax slab rates are, if the income is up to 4 lakh rupees, there would be nil rate of tax. If income exceeds 4 lakh and it is up to 8 lakhs, the rate of tax is 5%. If income exceeds 8 lakh rupees but it is up to 12 lakh rupees, the rate of taxation would be 10%. If income exceeds 12 lakh rupees but it is up to 16 lakhs, then the rate of tax is 15%. If income exceeds 16 lakhs and it is up to 20 lakhs, the rate of tax is 20%. If the income exceeds 20 lakhs and it is up to 24 lakhs, the rate of taxation is 25%. And if income crosses above 24 lakhs, then only 30% slab of taxation is there. So friends, it's a very beneficial budget, that is assessee is getting so many benefits out of it. But one point to be considered is in mind is that in new regime you will not get any deduction under 80C to 80U except 80CCB and CCH. Only these deductions are available. Other than that, you will not be able to claim any deductions. You will not able to claim house rent allowance if you are salaried. You will not be able to claim professional tax benefit or any other allowances. But if you are getting any perquisites from your employer, then yes, you will get those benefit of perquisites. Let's have some examples in this regard. For a salaried taxpayer, friends, salaried taxpayers get 75,000 standard deduction. So salaried taxpayer is having any income of 12,75,000, then 75,000 rupees is a standard deduction which is beneficial for them, and they can claim the deduction and then also their income would be nil. If the assessee is having national pension scheme and he is contributed, then up to 13,40,000 his income would be treated as nil. His income tax would be nil. So the assessee can get benefit out of it. Now we can compare that as a chartered accountant. Suppose we have to go for as a professional or whether we have to take salary from the employer. So if you are going as a professional, your income is 12 lakh rupees. So deduction of TDS would be there 1,20,000, that is 10% of 12 lakh rupees. But if you are a salaried individual, then there would be no deduction of taxation. So there are people who take jobs under chartered accountants. So they can decide whether they have to go as a professional or they have to come under salary bracket. So salary bracket is more beneficial because TDS of 1,20,000 would not be deducted in that case. Now friends, let's see another example. Salaried having capital gain income. Suppose a salaried individual has capital gain income. First example, his salary income is 6 lakh rupees and his short term capital gain at slab rates. There are two types of short term capital gain. Short term capital gain, if it is on listed securities, the rate of taxation is 20%. We will see in the another example. Here the short term capital gain is as per the slab rates. So 3 lakh rupees as per slab rates would be taxable, would become taxable, and his tax liability would be 20,800. In the second example, the salary income is 9 lakh and short term capital gain is 3 lakh. In that case, the short term capital gain remains same, but the slab will differ. Here up to 4 lakhs would be nil, 4 to 8 lakhs the taxation would be 5%, and 8 to 12 lakhs the taxation would be 10%. Therefore in second case, the short term capital gain is same, but the tax liabilities increases and it will come to 31,200. Let's see another example. If there is long term capital gain on listed shares. So in that case, in the salary income is 6 lakhs and the next example, the salary income is 9 lakhs. Long term capital gain taxation is at 12.5% flat. So there would be no slab rates. Therefore the taxation liability would be same in both the situations. That would be 39,000 in example 1 as well as example 2. Let's see another example where short term capital gain is taxable at the rate of 20% under section 111A. So the taxation liability would be 3 lakh at the rate of 20%, that is 62,400 in both the cases. It does not affect the salary income. There would be no slab charges in this case. Now friends, as and if an SSC is carrying on his business, so let's see his turnover for the year is 2 crore rupees. So the profit he can declare under section 44 AD would be 6% of the turnover. 6% of turnover means 2 crore rupees. That will come to 12 lakh rupees. Therefore his tax liability would be nil. So let's see friends that those assessees who are covered under 44 AD, so those carrying business under 44 AD, so they are eligible up to 2 crore rupees, that their turnover is 2 crore and they don't have to pay any tax. But if they are getting the amount in cash, if their turnover, like their business is such that they are not getting any amount in bank, suppose there are different truck operators or there are different businesses, they are getting the amount in cash, that is 1 crore 50 lakh rupees. In that case, profit would be 8% of turnover, that is 12 lakhs. So up to 1 crore 50 lakhs, they don't have to pay any taxation. So 12 lakhs benefit is, we have to see the profit of the SSC. Next, professional. As a chartered accountants, this is for us. Our gross receipts, let's say in example 1 is 12 lakh rupees. Our taxable income is 50%, that is 6 lakh rupees. In this case, our tax was already deducted 1,20,000, 10% of rupees 12 lakhs. So we will get a refund of 1,20,000 in this case. Now friends, we have been given an option that if your income is being received in bank accounts, only 5% is received in cash. In that case, you can take your taxable income at the rate of 75%. I have considered that both cash and bank is being received. Here the cash is more than 5% of our turnover. Example 2, we have earned 24 lakhs during the year. Our gross receipts is 24 lakhs. So 50% is taxable, that is 12 lakh rupees. Our tax deducted was 24 lakhs at the rate of 10%, 2,40,000 TDS. So our refund due is 2,40,000. Third example, if suppose we have gross receipts of 48 lakhs during the year, so our taxable income would be 24 lakhs. Tax as per slab. Now we have to, as it increases more than 12 lakhs, so we have to apply our slab. So as per slab, our tax liability is 3,12,000 and our tax was deducted at the rate of 10% on 48 lakh rupees. So 4,80,000 has been deducted. Our refund due is 1,48,000. Let's see the last example. If our gross receipts during the year is 72 lakhs rupees, so our taxable income is 50%, that is 36 lakhs rupees. So the tax on the above as per slab rate is 6,86,400. How much tax is being deducted? 72 lakhs at the rate of 10%, which comes to 7,20,000. Therefore, the refund due is 33,600 in this case. So in all the examples, due to tax deduction, we are eligible for refund of tax. Friend, this was the main aspect, that how the 12 lakhs and above 12 lakhs are being taxable in the hands of assessee. Next important point is scope of the perquisites under section 17(2). Like friends, this is a way back provision and this is still not amended, specifically in the case of employee having some medical treatment which is going on. Therefore, what is pronounced is that they have proposed to amend section 17 to increase the limit of 2 lakh rupees for the salaried individual, because getting a salary of 2 lakh is very less. So every assessee is getting more salary, and this is a 20 to 30 years old provision. So what they have started is they have proposed to amend section 17 to give power to make rules to obtain medical treatment of an employee or employee's family, and the perquisite would be calculated only if gross total income would be such. So they are going to announce what would be the gross total income. It would be increased from 2 lakh rupees to something which is not yet pronounced. Next is about house property. Friends, presently self-occupied property, we are getting benefit for second self-occupied property only when the assessee is not using the self-occupied property due to his business or profession in another city. Only in that case. But now any assessee can treat two self-occupied properties as self-occupied and claim its annual value to be nil. Next provision. This is very important provision because it was creating burden on the assessee, that is seller was collecting TCS and the buyer was deducting TDS. So two sections were clashing, that is 206C1H and 194Q of the Income Tax Act. So any person being a seller whose turnover exceeds 10 crores and whose receipts consideration from sales of goods exceeding 50 lakhs in any previous year, they have to collect tax from the buyer at the rate of 0.1% of the sale consideration if it exceeds 50 lakhs. And in the same case, mandated TCS by seller, while 194Q provides for TDS by the buyer on the same transaction. This section will not apply if the buyer is liable to deduct TDS. So they have proposed to omit section and delete section 206C1H and continue with section 194Q. Now friends, there is a rationalization of TDS threshold rationalization. These provisions are very important and very helpful for the assessee. On small amounts tax was being deducted, so they have rationalized the TDS provisions. First rationalization is interest on securities under section 193 of the Income Tax Act. Current threshold, there was nil from single rupee amount. If anybody, like government securities, if I am getting interest on government securities, so from single 1 rupee the amount is taxable. But now up to 10,000 they have proposed a threshold that till the 10,000 rupees interest you have received, you don't have to deduct any TDS. Then another section is 194A, interest other than interest on securities. Here for senior citizen the amount was 50,000. It has been increased to 1 lakhs. For another assessees it was 40,000, which has been increased to 50,000, and for other cases 5,000, and it has been increased to 10,000. Now friend, dividend, we receive dividend from different companies. So till 5,000 there was a threshold that no tax is being deducted till the 5,000, but now it has been proposed to increase it to 10,000. Next is income in respect of units of mutual funds of specified company or undertaking. So the threshold was 5,000, it has been increased to 10,000. Then winning from lottery, crossword puzzles, winning from horse race. So aggregate of the amounts is 10,000. It is now 10,000 was for the during the financial year aggregate, but now 10,000 per single transaction they have proposed the limit of this. Next is insurance commission. The amount received is 15,000, has been extended to 20,000. Income by way of commission, prize or lottery tickets, it was 15,000, increased to 20,000. Then in section 194H, any commission or brokerage has been received. So many agents are getting many commission. So from 15,000 to 20,000. Now 194I rent. I am paying house rent of rupees, suppose let's say 20,000. Then for the year it is coming 2,40,000. So till now I don't have to deduct any TDS. But friends, from the 1st April 2025, if we are paying rent of 50,000 per month, here per month is very important. So if I am paying up to 50,000 per month, then there is no need to deduct any TDS. But suppose in any month I have paid 51,000 rupees, then I have to deduct TDS on that case. So friends, this is per month limit. Please consider this in mind. This is not 6 lakhs per year, not at all. It is 50,000 per month. So if any month you have paid 55, you have to deduct TDS. But if you have paid 40,000, you don't have to deduct TDS. Now for professionals like us, or for any professionals or technical services, the limit has been extended from 30,000 to 50,000. Then income by way of enhanced compensation, the limit has been increased from 2,50,000 to 5 lakh rupees. These are very simple provisions regarding TDS. Now the next years on the startups. Startup section says that if you have done your startup till 31st March 25, so the sunset date is 31st March 25, they have extended it for more 5 years, that you are eligible. So what deduction you will get if you are starting a startup? So deduction is available of 100% for profit and gains for eligible startup for 3 consecutive assessment years out of the 10 years. It's up to you in which 3 years you have to claim the deduction, subject to your annual turnover does not exceed 100 crores. They are proposing that this 100 crores would be taken to 500 crores, but it is not confirmed by the ministry right now. And second thing is, it is holding certificate of eligible business from Interministerial Board of Certifications, and it is incorporated on or after 1st April 2016 but before 1st April 25. Now the date we have to read is before 1st April 2030. 5 years time limit has been extended, which is very beneficial for the startups. Now friends, regarding charitable trust, like from last 12 years I can see that every year they are taking any provision for charitable trust. They are not trusting charitable trust. The word is itself is charitable trust, but the trust is not there. So what they have now said is that we will have trust on you. So where registration or provisional registration has been granted subsequently by the Principal Commissioner of Income Tax or by the Commissioner of Income Tax, and there are certain simple violations. So what happens is that department cancels the registration. So what they have proposed is that if there is simple mistake in registration application, then your registration will not be cancelled and you will get benefit of registration of being a trust. Then the second thing is, what they have included is that a trust have to renew their registration every 5 years, but they said that now you have to renew your registration after 10 years in case your trust is small. Small means if your income before giving effect of section 11 and 12 does not exceed 5 crores during each of the 2 previous years, that is preceding to previous year in which the application is made, it is proposed to increase the period of validity of registration from 5 years to 10 years. It is very beneficial for small trust SSCs. Then substantial contributors were those SSCs whose trust donation in the previous year does not exceed 50,000. Now the limit has been extended from 50,000 to 1 lakh rupees, or aggregate of the previous years which exceeds 10 lakhs rupees as the case may be. Now there is no details are being required of relative and the concerns in which the SSC is having a substantial interest. Next very important point which they brought into is updated return. Friends, we have seen revised returns. Like previously, 2 years from the end of assessment year, we can revise the return. Then they brought in that within 1 year from the end of assessment year, we can revise the return. Then they brought in within 3 months from the end of assessment year, we can file revised return. Then they kept it to 31st March of the assessment year. Then they brought the limit to 31st December of the assessment year. So for revising return, we don't have time limit to file the revised return, and human has like the tendency of being erroneous. Sometimes they have done some error and they are genuine person, but then also they have not been given time to revise their income tax return. Therefore, our government has brought in a concept of updated return. Now what is this concept? That 24 months from the end of relevant assessment year, you can file your updated return. But you will not be able to claim any loss. You will not be able to claim any refund under updated return. Now friends, what new provision they brought in? They brought in that now from 4 years from the relevant assessment year, that is from 48 months of the relevant assessment year, you can file your updated return. So what are the conditions? That if you are updating your return within 12 months of the assessment year, then you have to pay 25% tax plus interest. If you are updating your income tax return within 24 months, then you have to pay 50% plus interest taxation. If you are updating return within 36 months, then you have to pay 60% plus interest. Now friends, there is one more tricky thing they have brought in. Suppose your income tax return has been scrutinized and reassessment provisions, that is under section 148A, has been imposed on you. Then you cannot update your return within 48 months. That is 4-year limit is not available in case your return is opened under 148A. But if assessing officer told that your return is not subject to 148, then you can file updated return within 4 years from the assessment year, and in that case you have to pay 70% of tax plus interest in that case. Now assessee have to go, like assessee would prefer the search and the because the taxation, if search has been conducted, then 60% of tax is being levied. So SSC will prefer the search matters. But let's see, the government has brought in the 4-year concept. Now friend, for assessment year 21-22, you can file in the 4th year, that is 31st March 2026, because the provision is applicable from 1st of April 2025. So 31st March 25, assessment year 21-22 limit has gone. For assessment year 22-23, if you have not claimed TDS, or if any mistake remains, and if you are showing more income, in that case you can file your return for 22, 23, 23, 24 and 24, 25. Updated return time limit is still available with you. Now next important provision, rationalization of tax collected at source on remittance under RBI liberalized remittance scheme. So if the remittance exceeds 7 lakhs rupees, then TCS is collected by banks. In this case, the 7 lakh limit has been extended to 10 lakh rupees. This will increase the cross-border transaction which are beneficial, specifically education related. They have removed TCS on education related remittances. So students going to study abroad, they would get more benefit out of this provision. Next is section 206AB, 206CCA, higher TDS TCS for non-filers of return of income. There was a concept that there is a list which is given on the income tax website that those who are not filing their return of income, they have to pay more TDS. So in this case, the assessee have to deduct more TDS, like 20% of the amount. But now this provision has been omitted. 206AB, extra TDS would not be deducted now. Now next thing is international taxation transfer pricing provision, block assessment in the case of transfer pricing. Transfer pricing is a very tough area, specifically dealing with the transfer pricing officers regarding arm's length price. So it takes time for the assessing officer to refer it to transfer pricing officer and he determines the arm's length price. Now once the arm's length price has been determined for year 1, so every year this is very cumbersome process. So what they said is, suppose for assessment year 25-26 your arm's length price is calculated and you want this arm's length price would be continued for next 2 years. So for consecutive 2 years, that is total 3 assessment years, you can continue the same arm's length price. You have to apply to assessing officer regarding the same, that arm's length price what you have decided for assessment year 25-26 would be continued for assessment year 26-27 and for the assessment year 27-28. Let's see, there is not much clarification in this regard. When assessee have to apply, the rules will come when assessee have to apply to assessing officer and all the provision in this regard. Now very important section, carry forward of losses in the case of amalgamation. Here it is talking only about carry forward of losses and not about unabsorbed depreciation. So what is happening, friends? A company is getting amalgamated with company B. Company B is amalgamating with company C. Company C is amalgamating with company D. The process continues. And every time the amalgamation is made, what they do is that they get 8 years carry forward benefit, that is green benefit. Whenever the amalgamation process is done, they carry forward it for 8 years. What previous company, amalgamated company, has done is not seen how much year. So what they have said is that once the carry forward loss by the amalgamated company has been taken for 5 years, so the next company will take only for 3 years. There would be not any the losses would not be carried forward for 8 years now. The remaining period only would be available to carry forward the losses. Next provision, this is very important, presumptive taxation in the case of non-resident which is engaged in providing electronics manufacturing facility. So any non-resident who has started business of electronics in India, then he can opt for presumptive taxation, that is 25% of the aggregate amount received or receivable. That is, suppose he got 1 crore rupees as turnover, so 25% of that only, that is 25 lakhs would be treated as his income, and on 25 lakhs taxation would be as per the limit which is prescribed. So the tax liability on non-resident will reduce below 10% rupees. So this gives boost to electronics market in India. Next provision is capital gain on transfer of capital assets by non-residents. So the tax rate was 10% right now under section 115 AD, which is brought to 12.5%, which is equivalent to residents taxation in case of capital gains. This is also a very innovative provision. Next is specific significant economic presence. So what is happening is that they want to rationalize the SEP provisions. So there was no clause which says that if you have purchased goods for export purpose, I have purchased goods and then exported. So it does not mean that there is a significant economic presence in India. This is given under section 9(1) for business connection, but this was not specifically given for significant economic presence. Therefore, it is proposed to amend explanation 2A of section 9, thereby proposing that SCP of non-resident shall not include the transactions in case of purchase of goods in India for export purposes. Then tonnage tax scheme, we are hardly using this provision, but they have proposed to extend benefit of tonnage tax scheme to inland vessels registered under Inland Vessels Act 2021. Then next is contribution to NPS Vatsalya scheme, section 80 CCD. So what happens is that parents or guardians are taking NPS scheme for their children. So in that case they get benefit when they contribute, but when they withdraws the amount was taxable. So they have allowed that partial withdrawal in the case of minor account for contingency would not be taxable, and if at the end of year the contribution has been withdrawn, then it will not become taxable. Then expansion of definition of undisclosed income. So undisclosed income includes money, bullion, jewelry, valuable articles or things, but it does not include cryptocurrencies, virtual digital assets. So now they have included virtual digital assets in undisclosed income definition under section 158B, so that those who are doing transactions in cryptocurrencies or any other currencies, bitcoins or coin wallet or anything, so what they are doing is they are doing hawala transactions through crypto exchanges, through cryptocurrencies. So those, if not disclosed in the income tax return, would be treated as undisclosed income. Cryptocurrencies are being included as capital asset, and now capital gain is being imposed on cryptocurrencies. Previously they were considered as business or the other income, and 30% tax was levied on that case. The tax would be as per the capital gain. Now time limit for completion of block assessments. So the time limit if there is a block assessment is 12 months from the end of month in which the last of the authorization has been done. Now they have extended, the limit is same but from the end of quarter. Previously it was from the end of month, now it is from the end of quarter. Decriminalization of late payment of TDS, TCS, this is very welcoming step. That is, if the assessee has paid TDS and TCS up to quarter end before filing the return of TDS, then the prosecution provisions would not be imposed on the assessee. Thank you so much friends for your patient hearing.